Obviously, we're seeing the markets looking ahead, pricing in for a soft landing here. The Fed is saying, no, that's not the case. Markets not believing them at the moment. What are some of the risks that people should be aware of as they're trying to not fight the Fed, but markets have obviously jumped ahead at this point?
Yeah, look, the expectation is the Fed is done. They may not be done, right? We may get a hot PPI number, CPI number somewhere along the way, and that would quickly have yields go higher. This whole year has been seesaw. Higher interest rates, lower stock prices, lower yields like we saw the last few days, higher stock prices. So, I can't say we're out of the woods together. It's still very data dependent. But I will say this, though. A lot of people are talking about these rate cuts happening next year. I don't see that. Again, I know Fed fund futures are showing by May, maybe a rate cut or two. I do believe it's going to be higher for longer. They may not raise rates, but I think they're going to keep it longer. And be careful what you ask for. If you ask for rate cuts, what's accompanied with rate cuts? Probably like a negative GDP print. So be careful what you wish for.
So Ken, if you expect those rates to remain where they are right now, do you stay away from growth names? Because that's where they've really suffered, right? I mean, the expectation here that the higher rates have hurt so many of these companies that have taken on a lot of debt.
Right, they have it. But again, a lot of these growth companies, though, I think are set up pretty well. A lot of the growth companies do wrap around new technologies like AI, software learning. We're in that hockey stick of growth right now. Higher rates definitely dampens the spirit of growth names and so forth. But if the argument is we're going to go to some type of recession next year, I would actually argue that a lot of these same technology companies are somewhat shielded from that. I mean, we're still going to use our Apple phones. We're still going to do Google searches. We're still going to buy on Amazon. We're still going to use our Microsoft team meetings. And, so again, I think there's, again, it can go both ways, obviously, but we think it's going to go positive because really, I think investors at this point in this market cycle want to see consistent earnings, and these big companies do deliver those consistent earnings.